So what this means is when the House passes a bill and the Senate passes a bill, you form what we call a conference committee of House members and Senate members, a small number of people from those committees. In this case, the Ways and Means Committee and the Senate Finance Committee. And those conferees right now are in the middle of negotiating the final version of comprehensive tax reform. This is the greatest rewrite of the tax code in 31 years. All right. Okay, so what I'd like to do is I just want to start off with a conversation between Kristi and myself, but we also want to encourage your questions, those of you who are watching on the web. So please submit your questions by commenting on the tweet or the Periscope stream. So again, for those of you who are hearing us, listening and watching this, submit your questions by commenting on the tweet or the Periscope stream. But in the meantime, Kristi, I just want to ask you a question. Since you're one of the 5 House Republicans on the Conference Committee in the middle of all these negotiations, give us a sense of the status of things, give us a sense of timing, and tell us about your priorities as you're negotiating this final tax reform bill.
Well, first of all, thank you for being willing to appoint me to this conference committee. Speaker Ryan chooses who is in the room having these negotiations, and I appreciate the fact that you saw the need to have a small business owner in the room. I've run a hunting lodge, a restaurant, a farm, and a ranch. To have a farmer in the room is critically important as well. But I'm also a mom, someone who has raised children and knows how the tax code impacts your family. Our family experienced being impacted by the death tax, and so that I think is a story that it's been important to have in the room. So I appreciate the opportunity to be in there and to negotiate the final terms of this agreement, which is really going to help a lot of American families. You know, the committee's been working really well together. We get together with the Senate negotiators that were appointed as well and talk about the different provisions in the bill. My priorities have been on the small business side and the family side. Obviously, the corporate side is important, and international tax reform is critical for growing our economy. But I would say my specialty has more been on the pass-through side, how we tweak that to make sure that our small businesses have an opportunity to compete with corporations, but also that we're making sure that we're lowering rates for everybody in this country. What's been great, Paul, is that in this entire discussion is that every conversation has come back to what helps low and middle income Americans. I'm happy to say that the negotiations have ended up very well with those priorities in mind. We've got families in the United States that are going to have lower taxes. They get to January, their paychecks are going to be bigger. Small business owners that immediately will see an impact on having more dollars that they can use to reinvest in their businesses, that they can use to raise wages for their employees that are depending on it. And so our goals will be met, and we believe that we'll have our open discussion today, our open committee hearing, that anyone can tune into as well, and we'll have a final report, we believe, by Friday morning.
Let me, Glenda asks, and you basically went into this, but maybe just walk through how she should look at this. Are there people, is there a tax break for people who make $50,000 a year?
Absolutely, yes. We not only lower rates, but we also move thresholds on the brackets to who's paying at what income level. So those individuals, I'm like an average South Dakota family in South Dakota, our average household income is $54,000 per year. Yeah, and so that's almost exactly.
So what's the average tax cut for
the average tax cut for that individual? You know, that we're letting these businesses reinvest. Not only do they expand their businesses, but they reinvest in their employees. That's been proven economic, not just theory, proven economic history, that when you have tax cuts like this, then that's the benefit. So we've had the Tax Foundation, other economists come in and do this analysis for us. You know, we had over 12 formal hearings in Ways and Means on these policies to make sure we're doing the right things, to make sure that Glenda and families like hers all across the country are going to see the benefits.
Yeah, the way I describe it, this literally is basically what a tax form would look like for 90% of American families.
So that's life-changing.
This is life-changing. So think of the complication you get from the IRS. Think of just the obnoxious factor from the Internal Revenue Service. By doubling the standard deduction alone, 9 out of 10 people in America will be able to fill their taxes on a form like a postcard.
Did you know that when people call the IRS, that 35% of them don't ever get a person or a response? Yeah. So that's one of the reasons people want to go to a postcard, is because the IRS, we need to fix them too.
We need to fix the IRS as well, but we need to, and the way to fix it to begin with is to simplify the code in the first place. So it's not so complicated, so they can do all the things that they do to harass people effectively. And what I always tell people to take a look at the code. Well, do you have children? If you have children, you're going to get a higher per child tax credit.
Yes.
You'll go from a family with a $12,000, $700 standard deduction to a $24,000 standard deduction, and then the rates you pay, the tax rates you pay, will go down as well. And that's the final negotiations will say how far they go down, but they're going to go down. Yeah. So there's relief sort of on all sides of this.
And we've worked to try to get rid of the marriage penalty as well, just because we want strong families. We want strong futures for them, and then we make sure we go into the family tax code. I've worked a lot on the child tax credit, and we have a credit not only increasing for children, and in the House version, we had a credit for the taxpayer and the spouse, and then also if you had someone in your family that was elderly living with you as well. I don't know if that's what the final version will reflect, but it will definitely reflect a big increase for the child tax credit to help those individuals who are raising our future.
And that's the point. The point is, on the individual side, putting the business stuff aside, the goal is to focus tax relief on middle income families. So there's people who are in the stage of life where they're caring for others, like their children or their parents, where they get tax relief so they can better make ends meet, so they can put some money aside. You know, what we see when we're working on this is we're about a decade into a very stagnant, slow growth economy. Ever since the Great Recession, we have never hit what we used to consistently hit, which is a 3% growth economy. And by not growing our economy at that 3% average, that means people get lower wages. They don't get a higher standard of living. They have less take-home pay. So what we're trying to do here is not just give people more take-home pay by reducing their taxes in the first place, but getting us the kind of economy and getting us the kind of tax reform for businesses so that they get higher wage growth. They get better incomes to begin with. And we have a faster growing economy that brings wages up, that brings more jobs. So that's really the goal here. But also what we're trying to do is make sure that the people who are really experiencing economic anxiety get some relief. Surveys are telling us, almost 7 in 10 Americans are telling us that they are living paycheck to paycheck in this country. And over half of Americans are about $400 or $500 away from living paycheck and paycheck. They don't have $500 in a savings account in case an emergency occurs in their family. That's the kind of economic anxiety we are experiencing in America today, and that is what is really motivating us to fix this problem, to address these issues with this kind of tax reform. A few people have asked, I'm looking at the Periscope here, what is going to happen with the state and local deduction? This is a question we get quite a bit, so let me lob that one over to you.
Thank you very much, I appreciate that. So we have always had a provision in our tax code that allowed individuals to deduct any taxes they might have paid at the state and local level. So that typically is property taxes, it may be income taxes. Some states like South Dakota, we don't have an income tax. We do deduct property taxes. Other states like Illinois, I'll use them for an example, or California, they have an income tax, they have property taxes. And the fact that they can deduct those taxes off of their federal tax is a huge benefit. In fact, it's $1.5 trillion a year that people deduct off their federal taxes. We talk about our federal budget and the deficit that we have and we need to address. When you look at that big hole that's coming out just because of that state and local tax deduction, it is significant. We want to have a provision in there to retain some of that deduction. The House bill reflected a $10,000 deduction that people could claim still on their income tax. The Senate didn't have that provision, but we think that we're going to move more towards the House's policy. Yeah. We recognize that these states that are highly taxed, that those families need relief. And so we are not only doing that, but we're also looking at some of those states and their individual brackets to see if those need to be addressed as well. Because we don't want families that happen to find themselves raising their families in states that, I think Wisconsin has an income tax.
Yeah, we do. We have an income tax, a sales tax, and property taxes.
Yeah, so you have it all. And so families that live in Wisconsin obviously are going to need some relief. We can't just remove that deduction because then their taxes are significantly
greater. That's right, that's right. So John asks, we sort of just addressed this, but with the corporate rate cut, do you believe workers will see these profits?
Oh, I absolutely do, because you know, it's tied to history that when you give a corporate rate cut and we become more competitive in the world, right now our corporate rate is the highest rate in the developed world. So we've seen our companies leave, we've seen them shrink, we've seen them put more investments overseas. We want them to come back. So we're going to lower those rates to where we become the place that they now want to locate. That means they expand, they hire more workers. You know, people talk about debt and deficits all the time. We get families in America now that aren't living on poverty programs because they're working a job. They're not living on welfare or food stamps or housing assistance because now they have a company that wants to hire them and pay them well. That turns our federal budget around quickly.
Yeah.
Not only do you have a family coming off those programs, now they're paying taxes because they're providing for their family.
That's exactly right.
And so that's the whole goal on this, is what can we do to make sure those individuals have some hope for the future.
Yeah, so one of the points that we're trying to make, and I just want to emphasize this, and I'll wrap into the last question. A few people are saying, how does this affect small businesses? One of the issues that we have to deal with is we live in a global economy whether we like it or not. And the fact that we live in a global economy, we have what is arguably the worst tax code on businesses in the industrialized world with the countries we compete with. So for instance, we tax our corporations at 35%. We tax successful small businesses as high as 40%.
We do.
But the average tax rate on businesses in the world, industrialized world, is 22.5%. So, you know, you're South Dakota, I'm Wisconsin. We compete head-to-head against Canada on a daily basis.
Yes, we do.
Canada agriculture, Canada businesses manufacturing, they tax their businesses at 15%. So we're taxing our businesses in South Dakota and Wisconsin on the federal level, you know, as high as 35 or 40%. That puts us at a massive competitive disadvantage. And what's happened is it encourages U.S. companies to move overseas and become foreign companies. So we have a current problem. In Milwaukee, the biggest business we had in Wisconsin that was publicly traded, headquartered in Wisconsin, was a company called Johnson Controls. It controls the thermostats you see in all these buildings. They are now an Irish company headquartered in Cork, Ireland.
And what's Ireland's rate? It's
Ireland's rate is 12.5%.
Yes, I was going to say, I don't know if we can get down to 12.5% in this bill.
That's right. So part of the problem is we're literally taxing businesses overseas. And then when you take a look at the way the tax code works today, if a U.S. business sells something overseas and makes money by doing that, our tax laws basically make it impossible for them to bring that money back into America to reinvest in America. And the way our capital tax laws work is it discourages making things in America. Yeah. So what we want to do is reverse all of that. And we basically say, if you make money overseas, you can bring that money back without a penalty, so you bring the money back. We lower our tax rates across the board for all kinds of businesses, so we're more globally competitive. And if you invest in your business in America, buy a new factory or a new piece of equipment or expand a building, you can write that off in the year in which it takes place. We call it full expensing. That's for small businesses, big businesses, everybody in between.
And that's key. We've had hundreds of companies talk about how important that is. And that's what the question on small businesses reflects, that critical component, as well as interest deductibility, as well as the opportunity to make sure that they're going to have a lower rate and be able to utilize that, so that we're not just focusing on big corporations that need to come back. We're also focusing on those small businesses that are on Main Street to make sure that they can be successful as well.
One of the reasons why the National Federation of Independent Business is so supportive of this tax plan, both the House and the Senate version, is that there's a small single-digit preferred rate for small businesses, for those Main Street mom-and-pop businesses with just a couple of employees, a handful of employees. They get an even lower rate than what they pay today, and they can write off the investments in their business in the year in which it takes place, so that they do that. We are convinced that this is going to put all of our businesses in a better position to compete locally, globally, but more importantly, to stay here in America, to hire Americans, and to raise wages. So that is one of the reasons why we're so focused on doing this. This is a commitment we made when we were running for Congress as a party in 2016. We basically said, we've got to get this committee out of neutral into growing faster so we can raise wages, improve people's living standards, give people economic peace of mind. This is why we're doing this. And I want to say to Kristi Noem, Thank you for being a leader on this. You've been just a passionate leader, as you say, as a mom, as a rancher, as a farmer, as a small business person, taking that experience to Washington. You are now in the room making the agreement work so that we can have an agreement that we can bring to Congress, to the floor of the House and the Senate next week, so that we can get this done by Christmas, so that we can wake up in the new year of 2018 with a new tax code that is simple, that lowers people's tax rates, that gives relief to middle-income taxpayers, and helps us just create more jobs. So thank you very much. Let me just ask you if you have any closing comments.
You know, I just think that the opportunity we have is wonderful, and that it's great that we've had the leadership that we've needed from our speaker. He's worked on this for decades. Became very frustrated with the tax code when I was running our family business, started a hunting lodge from scratch, trying to take care of my family, had the tragedy of my father's death to deal with, and then worked on tax policy in the state legislature. So to now be working on federal policy years later, and the fact that I'm in that room able to contribute to the discussion, I think it's a wonderful thing about America. That's what makes our country great, is that someone can be unhappy with the way something is or want to help fix something, and you actually get to be a part of the solution. So thank you, Mr. Speaker.
It's fantastic. It's a great note to end on. Thank everybody for participating and joining us. Appreciate it.